All right, folks. Jeez, I'm eating this gingerbread cookie right now. This is pretty darn good. This is episode 6 of the core business curriculum. This is a remaster because some episodes gotta be remastered. Just some things gotta be reworked on. In which those episodes are 6, 8, and 9. This is episode 6. Asset classes. We're going over 6 different asset classes. Okay. We're going over stocks, forex, bonds, commodities, futures, and options. Whoa, pretty nice, isn't it? So first, stocks. Stocks is not done too hard, right? I can make that font. Is that too small, or is this just like pulled real tight? No, it's only on 20. Let me put it on like 28. I just said stock. No, I was supposed to say stocks. So stocks, nothing too crazy. When you're trading stocks, you are temporarily owning part of a company for a short period. I think that's still what temporarily means, but you get what I'm saying. That's what all you're doing with stocks, okay? And when you're trading it intraday means inside of a day, which is day trading. You are simply buying and selling shares or calls and puts for options, okay? Nothing too crazy. And if you're investing into them, you would just simply be buying shares. It's nothing too crazy. That's all stocks is. There's nothing too complicated about it. That's stocks, okay? Forex, on the other hand, as you can spell it, Forex right there. Forex, okay? When you're trading Forex, you are trading the fluctuation between two currencies, okay? So, for example, euro versus dollar. So if we go to this right here and type in EUR, USD, this is the euro against the dollar, okay? If we go here, you'll see that there's a pricing here. 1.15642, if I can zoom in on that. 1.15645. Well, the price is obviously fluctuating. I just said that. But when you're trading this intraday, you're trading the fluctuation between the conversion or exchange between two assets, okay? So I don't know which way it goes, but I think if you have $1 and you convert that into euros, you will get €1 and 15 cents. I think that's how it works. I'm not sure. I think it's the one in front right here, the US dollar, and then you convert it into the one that's in front here. So whatever's behind it, I think you convert that into whatever's in front of the pair. And I think that's how it works. But you get what I'm saying here. You are trading the fluctuation between the conversion price of two currencies. Okay, that's all you're doing, because that conversion rate is going to change. That's why it's called forex. You know what forex means? We'll search it up. Geez, I just had a stutter. I'm kind of sick, so don't mind me if I cough or sneeze, because mind you, these recordings are completely unedited. Forex. First thing you should see is foreign exchange. See that? Right there. Foreign exchange. That's what that means. Okay. The global market where currencies are traded against one another, it is worth an investment by allowing the conversion of one currency into another. Okay, and I just explained that just now. So that's forex. What were we talking about next? I think we were going over I forgot. I think bonds. Yeah, bonds. Okay, so bonds. Geez, I'm getting Discord's notifications everywhere. So bonds, it's simply loans you give to the government. Okay, and intraday, if you're trading bonds intraday, you'll likely be trading them over the counter, like behind institutions and stuff like that. And if you're doing them like outside of intraday and you're just simply trading them, putting money into bonds, they'll give you like an interest rate. So that's basically how they're traded. I know it's very simple. Oh my God, what's bonds? Blah 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 bonds. Like if I search up bonds right now, they'll probably give you like a whole long essay on what bonds are. The definition, if I can even spell, of bonds in the markets, whatever. Right, the bonds is a fixed income instrument that pays a fixed interest rate or coupon to its holders. It can often be purchased through leading brokerage platforms. That's basically what I just said, but not directly. But here, in financial markets, a bond is a type of debt security where an investor lends money to an entity like the government or corporation for a set period. In return, the issuer promises to pay a periodic interest payments and repay the principal amount on a maturity date. Nothing too crazy, right? Pretty simple. Now, commodities. Commodities are stuff like soybeans, corn, I don't know, copper, gold, silver, platinum, stuff like that. You're probably like, huh? I can trade soybeans, like soybean fair value gap? Yeah, that's a thing. Like, watch this. I don't know what it is, but I think you can type in soybeans. Yeah, you can trade soybeans. No BS. If I click on it, this is an actual market. Like, you can trade this intraday, and This market moves based off of supply and demand. Inventory status, like if there's no inventory for soybeans, you're probably going to see this market crash, or you're probably going to see the pricing go up due to a lot of demand. So it's just simple causes. These markets move off of supply and demand. They're not really manipulated because soybeans, how are you going to manipulate a commodity, an actual thing that we use on a daily basis? It just doesn't make any sense. So this is driven from supply and demand, inventory goods, and there's one other thing too. I forgot the other factor that causes the commodities market to move. But fourth, futures. Futures, all you're doing, buying or selling an asset at a future date. Nothing too crazy. If you buy at 5 o'clock and you want to sell this thing at 8, you can do that. It's nothing too crazy. But there's a difference between Forex trading and futures trading. And I'm going to explain that at the end, because the way they calculate P&L, or profit and loss, on Forex is just simple numbers. But with futures, it has a specific P&L gain or profit and loss for how the market fluctuates per asset or per market. You'll get what I'm talking about once I explain it. But they're calculated differently. The profit and losses are calculated differently between the two. Forex is just simple math. Futures, it's actual specifics for certain markets. So you're going to learn that soon. And what was the last one? We went over stocks, bonds, Forex, commodities, futures, and that's the last one, options. So I think options, I don't really have a lot on options, honestly, because I don't trade options. I don't trade stocks. I don't do any of that. No ETFs, nothing. Okay. So if I get this wrong, then hey, you can flame me in the comments. I don't mind. But to my knowledge, options is you're simply giving the market the right to buy or sell your order's pricing, which is called a strike price, at a certain, price, whatever you set it at. So if you set it at $100, then you're giving the market permission to say, okay, he wants his pricing here. Sure, we'll give him that. And once it hits that pricing, boom, you either buy or sell at that point. I don't know what the correlation between when it comes to like calls and puts. I don't know which one it is. I think calls is sells and puts is buy. I'm not sure. But if you can tell me in the comments, you can say that. But this is a very, I think, short episode. I think we went over everything. Let me count. Stocks, Forex, bonds, yeah, we went over everything. So that's all the asset classes that you really need. You don't need to know about ETFs. You don't need to know about real estate. You don't need to know about all the other unnecessary stuff, because it's not going to be used here. You're going to be trading most likely either Forex or futures, okay? Which is like stuff like indices and stuff like that. Indices, I forgot to mention it. Yeah, indices. Indices, we're going to go over that real quick. Indices is basically a bunch of stocks compiled into one index, and you're seeing the overall performance of all those stocks that are in that index through a fluctuation from that index. So, for example, if the index goes from 25,000 to 25,500, you can clearly understand that the stocks, or most of the stocks that are in that index, are performing higher, or clearly going higher. So that's all indices is, nothing crazy. Indices are things such as S&P 500, Russell 2000, US 30, what's the other one? Oh yeah, NAS 100 or US 100. Those are indices. But anyway, I've been talking for a little too long. This is episode 6, the remaster of the Core Basics curriculum, and I'll see you guys in the next remaster. Good luck and good trading.